Welcome back to Real Vision. I'm Ash Bennington. We have a special show for you today. We're joined by Bo Hines, Executive Director of the U.S. President's Council of Advisors on Digital Assets, and Tyler Williams, Counselor to the U.S. Treasury, Secretary of Treasury for Digital Assets. Gentlemen, welcome to the show. Welcome back, Tyler.
Thanks for having me, Ash.
Thanks for having us.
Listen, it's great to have both of you here today. So much to talk about. Things are moving incredibly fast in the space right now. The Genius Act was signed by the president on July 18th. Less than a week later, exactly 1 week ago today, the White House released the Strengthening American Leadership in Digital Financial Technology report that both of you guys worked on. In your own words, tell us about the report, its goals, and why it's important. We're going to start with you, Bo, since it's your first time.
Well, look, I'll start at the high level here. I think that, we have to thank the president for his leadership. We have to thank our brilliant AI and crypto czar, David Sachs, for all the work that they've done. I want to thank Secretary Besson, Secretary Lutnick, their teams. Tyler has done phenomenal work over the course of the first 6 months to get us to this day in this place, which is historic. I mean, this is a sea change. I mean, broadly speaking, this industry has been beaten down and kicked down over the course of the last 10 years. More specifically under the Biden regime. And so, we're pushing this industry forward. We're creating a clear set of rules, a regulatory framework that, outlines who the regulator is, what jurisdictional authority that they have, and allowing for innovation to occur here. It's about creating an environment that attracts people to innovate here in the U.S. I feel as if this report is a major step forward in doing that. But, there's a lot of work that's been done. We've kind of looked at it in three phases, right? We've had the demolition phase, removing a lot of the blue tape, as the president likes to call it, that existed underneath the Biden regime. Making sure that digital asset firms can interact with traditional financial institutions. We've moved on to the construction phase. One big pillar of that is already complete with a regulatory framework for stablecoins with Genius. We're working diligently to get clarity through the Senate chamber as well. And then we move on to implementation. I think this report plays a crucial role in that. And there was just so much incredible work done amongst the actors in the working group. And, I'll let Tyler speak to that a little bit as well.
Absolutely. I echo everything that Bo just said. I think he's hit the nail on the head. I think about the digital asset policy framework in Washington as sort of a three-legged stool. We have stablecoin policy, we have market structure policy between the SEC and CFTC, and the third real big leg of this is the report. And this report sort of stems from the president's executive order. And what it tasked us with doing was making a comprehensive set of recommendations for the U.S. government to stand up both legislatively and regulatory-wise. And this report lays out a comprehensive framework across the federal government actors on what the government can do on an immediate basis and what the government needs to do to work with Congress to advance legislation. So this report is a guiding North Star, a guidepost for the executive branch and for the administration to work forward and execute against. It has a comprehensive slate of recommendations across a wide array of issue sets and sort of sets that groundwork for us to begin.
So let's break some of those recommendations down. Folks can go and check out the report themselves. It's available online. But walk us through some of the key recommendations and why you think they're important.
But do you want me to take a first crack at it?
Yeah, go ahead.
Yeah, so I would say I would think about the recommendations in sort of maybe 5 or 6 different buckets, and don't quote me on this if I get it all wrong. Stablecoins, right? So we know we have legislation that has been advanced to the president, got signed into law a couple weeks ago. I spoke to your audience maybe a week ago or so about this exact topic. Now we're in the implementation phase of the Genius Act. So that's a really big, important piece of it. Then I would say within the prudential banking remit, we have a comprehensive slate of recommendations and work that we need to begin on how we sort of break down some of the barriers that emanated from Chokepoint 2.0 and what we can do to really set out sort of the legal permissibility of activities from banks' perspective when they're interacting with permissionless technology and when they're interacting with digital asset native firms. Then we move on to sort of the tax recommendations. Obviously, we have a comprehensive tax reform that was advanced in the OBBB, the One Big Beautiful Bill. What we need to do for the digital asset space is provide clarity and certainty with regard to their tax obligations, and that stems from Bitcoin miners and other infrastructure providers in the space to the participants in trading. So it's a long list of things that we need to work forward on. Then I would say market structure. We have Congress that's advanced bipartisan legislation out of the House with a huge vote. It's imperative that the Senate moves forward and acts on that expeditiously so that we can advance that to the president's desk. That's
this is
another
Clarity Act that
this is the Clarity Act that Bo just mentioned. We've seen strong activity out of the Senate Banking Committee under Chairman Scott's leadership. We'll look forward to working with our Senate friends and advancing that as expeditiously as possible. And I would say there's a long laundry list of other items that we need to carefully work forward with. And whether it's actions that the SEC and CFTC can immediately take, or if it's actions that some of our other counterparties, whether it's for BSA, AML obligations, that we can advance the industry forward so there are clear rules for blockchain developers and builders in the space. Bo likes to say, and I like to copy what he says, that the message is welcome home. When we say that, it's imperative that we provide clear rules of the road for the industry to do so. I don't know, Bo, if you want to.
No, I think that you summed it up perfectly. I mean, look, this is a completely new environment, right? I mean, folks in this space, I can't repeat this enough. I mean, they were basically victims of policymaking through persecution and prosecution. That is no longer the environment in which they're operating within. We want people to be building here in the U.S. This is the greatest place to do business. We want them accessing our capital markets. We want companies IPOing here. And it's absolutely imperative that the U.S. is the leader in digital asset technology, period. The Genius Act revolutionizes the financial system. It basically updates archaic payment rails that have existed for quite some time, creates more cost-effective, more transparent transactions for the U.S. consumer. It ensures U.S. dollar global dominance for decades to come. There's a world in which, I've said this a couple of times, it's a world in which maybe the U.S. dollar is the only fiat currency that exists in 3 decades as a result of this legislation. So, Tyler described it perfectly with, the three-legged stool. All of these things are coming together to create an environment that industry has been begging for quite some time. And that's a testament to President Trump's leadership, David Sachs' leadership, Secretary Bessent's leadership, and the hard work that the members of this working group have done. The president was brilliant in creating this group to pull everyone from interagency together to say, look, we're all going to put our stamp of approval on what this regulatory structure looks like. And that's what you're going to see in this report today. And I think industry should be extremely excited about it.
Yeah, and maybe I'll just add one other thing. I worked under the Trump administration in 45 at Treasury, and we worked on these comprehensive core principles reports that stemmed from a presidential executive order. And the importance of that, it was across banking and it was across innovation and asset management. All of those reports set out comprehensive recommendations that then the executive branch, the Treasury Department, the agency actors went to execute against. This report, it shouldn't be underestimated because it's a comprehensive framework that the administration is going to move forward to execute against.
Well, you said something a moment ago that I think a lot of our viewers were nodding their heads when you said, which was the idea of building the Web3 infrastructure here in the United States. I think it's very important to a lot of people in that space that this is developed here. The United States has done incredibly well from Web 1.0 and Web 2.0. Talk a little bit about your vision for what that looks like on the ground. How do you see that unfolding?
Well, look, I think that a lot of developers in this space were scared to build here for quite some time, as has been outlined earlier in our conversation. And so, for them, this is now a clear environment in which they have a set of rules that they can abide by. It's absolutely imperative that we lead the charge in this race, as you've articulated. We've had dominance in Web 1. We want to continue this forward with Web 3. And obviously, most of the technology that is going to basically revolutionize the financial systems are coming out of the digital assets world. So, breaking down these barriers, eradicating Operation Chokepoint 2.0, which is a very real and well-documented thing at this point, is extremely important to allow vertical integration, to allow these digital asset firms to interact with traditional financial institutions. That's a recipe for success, and that's one that we're building together. We've had a lot of fun doing this. We've had very smart people in the room discussing these recommendations and the best way to create that framework. And I think that we've built a phenomenal product that everyone inside of government and the Trump administration is extremely proud of.
There's a lot to cover here, so pardon me if I jump around a little bit, gentlemen. But I want to talk a little bit about stablecoins because this is something that has gotten through Congress. I'm curious how you guys think about how that's being implemented right now, how that's going to unfold, and what folks in the industry and in the space more generally should look for going forward.
Yeah, maybe I'll take a first stab at it. So the Genius Act tasked Treasury and the bank regulators with implementing, a comprehensive framework to put programmable money, programmable dollars on the internet, which is a huge deal with all of the stuff that Bo just talked about. It is sort of like the plumbing for the industry to exist in the United States and be built here. Without getting in front of where we are in terms of the actual work product, we are setting up a comprehensive implementation team at the Treasury Department to work on this. It is across the building. It is a fulsome effort. It puts the OCC sort of in the lead driver's seat in terms of being the licensing entity for federally regulated stablecoin issuers. The states
this is the Office of the Comptroller of the Currency.
That's correct. Yeah. Sorry, I'm sorry. It is the bank regulator for national banks. And then it's also the primary licensing division within the bank regulatory world for new entrants and novel activities. And I would say the states have a really important role, and we've seen the states sort of be the laboratories of our democracy in terms of innovation in this space so far. So it keeps the states in like a strong position relative to there being the licensing bodies for stablecoin issuers as well. So we're fast at work right now. I imagine that we will try to expeditiously meet the timetables that are established in Genius, and we want the industry to continue to grow and thrive in the United States. So it's imperative that we sort of get this done in a very tight time frame.
One thing I'll add to that is, we viewed this as basically laying the foundation for an updated financial system more generally. And so we can start talking now about exciting things like tokenization of public securities, 24/7 markets, all the things that folks in this space have dreamed of for a long time. This is the foundation to do that. There are many steps to get there. But look, you can create a world in which if you want to access U.S. capital markets, you're going to have to use a dollar-backed stable. That's an immensely powerful thing for the United States of America. And, I can't overstate how important this piece of legislation was for our country and the financial institutions more generally.
It's so interesting to hear you talking about that in that context, Bo, because, for many years, there were just two totally parallel systems. There was traditional capital markets, macroeconomic space, and then there was the digital asset space, and never the twain shall meet for many, many years. But to hear you talking about the integration of the digital asset space, traditional financial space, the ability to access U.S. dollar-denominated stablecoins, the interrelationship with U.S. Treasury Securities, it really is an interesting moment. How do you guys think about the significance of this?
You want me to take it first, Sam?
Go ahead.
Yeah, I think it's drastically important to the U.S. economy, and I think what I said a minute ago, we're putting programmable dollars. Like if you look at the assets that undergird the stablecoin issuance at a federal level in the United States under Genius, it's ultra high quality liquid assets. It's primarily bills and notes that are like 93 days in maturity and in. And when you think about that, and if you take some of the private sector estimates of what the industry could grow to, it is a new set of demand side for Treasury issuance. And that's very important to the growth and stability of the U.S. financial system. And more importantly, when you're putting programmable dollars on the internet, they're accessible across the globe. And so we're talking about putting U.S. dollars in the hands of people all across the globe.
Yeah, you're truly injecting Treasury notes into foreign economies, right? You're also giving access to our capital markets to folks that might not otherwise have it. And I think that that's the world in which we're going to get to very quickly. You're already seeing the traditional financial players start to announce that they are either building their own stable and or partnering with digital asset firms in order to do so. So, people understand that this is going to be a complete change within our system, but it's one that benefits the American consumer at the end of the day and truly benefits our country more holistically.
I know we're running tight on time, but I want to just ask one more question, which is something that you mentioned a few moments ago, Tyler, which is the idea of market structure regulation. Talk to us, for those non-lawyers out there, why is this so important? Why is it such a big deal?
Yeah, I think maybe we'll borrow a little bit from history. The U.S. always talks about how we're the world's leader and we have the deepest, most liquid capital markets. That's not by accident. That's because we have the best legal infrastructure in the United States. We have clear rules of the road between the SEC and CFTC. And much of that infrastructure was built, 100 years ago at this point. And so when you think about the capital markets and the exchange infrastructure and the broker-dealer infrastructure, that lives and exists in the U.S. because we built a well-regulated regime around it. It's no different to me in the digital asset economy. What we need is clear rules of the road for digital assets that are securities and digital assets that are non-securities. And we need a clear infrastructure for that to exist and persist in the United States. And if we do that, we'll be well ahead of the game in the rest of the world. And, we have the deepest, most liquid capital markets. I'll repeat what I just said. If we build that here, people will come.
Couldn't have said it better myself.
All right, gents, let me ask you this. Final thoughts, key takeaways that you'd like to leave for our listeners and our viewers on this important topic. We'll start with you, Tyler.
I would say read the report. We're proud of it. I'm biased in this, but I think it's the most comprehensive report on digital asset policy that any government has written across the world. And I view it as a roadmap that we're going to work diligently to go execute against.
It also may be the first White House report that I've ever seen that contains the word composed of source code that is publicly available.
No, look, I would just say it's an exciting time. Again, I want to thank the president for his leadership. I want to thank David and Secretary Besson, Secretary Lutnick for everything they've done. I want to thank Tyler and the other members of the working group. Just as Tyler said, go read the report. We're truly revolutionizing a financial system here, and that's due to the leadership of these guys. So we're looking forward to having a fun rest of the day. We'll have a good event here at the White House, and look forward to next time talking to you.
Bo Hines, Tyler Williams, thank you so much for joining us.
Thank you.
Thanks, Ash.
Thanks for watching. Thanks for listening. Have a great afternoon, everybody.
Hey, thanks for sticking around to the end. Look, if you enjoyed it, hit the subscribe button and check out the video here on the right-hand side. I'm sure you'll enjoy that one as well. And if you're ready for more, go to realvision.com/join. I'll see you there.